our webinar today. New tax year, are you up to date with legislation? Today's webinar is being presented by the team here at GoSimpleTax. And as you may know, I'm seeing quite a few names that are regulars here on the webinars. My name's Leanne, and Aiden, who'll join us shortly, will be your main host. Just want to take this opportunity to thank the IAB for allowing us to bring this webinar to you all today. You may have seen this is the second in a series of webinars we'll be hosting with the IAB, so I'm sure we'll see you all again over the course of the coming months. Before we start, there's just a little housekeeping I need to run through with you. The webinar is being recorded, and all information provided is correct at the time of recording, today's date being the 29th of June 2023. In the top left of your screen, you'll see a Q&A section. Please feel free to ask questions as we go along. Aiden will answer as many of these as he can at the end of the presentation. Okay, I think that's everything covered. So at this time, I'm going to hand you over to Aiden, who will start today's presentation. You ready, Aiden?
Yeah. Just unmuting the mic. Okay. Cheers, thanks, Leanne. So, hi everyone, thanks for joining today. As Leanne's just said, we're going to be looking at the new tax year and are you up to date with legislation? I mean, I hope so. We're a couple of months into the tax year now, so it's definitely worthwhile being on this webinar if you're not. So, I'll start off with just the contents of what we're going to go through today, and then we will go into a poll. So we're looking at income tax rates and thresholds, national insurance, dividend, capital gains, the MTD roadmap going forward, and the whole making tax digital scene. We'll speak about that, and then we will go into a live Q&A. So hopefully that covers pretty much everything that you need to know in terms of the individuals, self-employed, landlords, tax rates and thresholds, and then we can move on to the MTD because I know there's always quite a few questions with that. So first of all, we'll just go into poll number 1, and how do you currently prepare/submit your client self-assessment? So if Leanne, you can kindly put that up, and I believe the options should be HMRC portal, digital software, GoSimpleTax, unbiasedly a little bit bigger than everything else there, but yeah, GoSimpleTax is an option. Excel spreadsheets in terms of the preparation, and then none or I don't currently offer this service may be on the card. So let's have a look. So everyone can vote now. I'll wait until the voting stops changing quite quickly, and then I'll publish the results so everyone can see. Okay, voting seems to have, oh no, we've just got a quick influx of a couple more people. 11 people haven't voted, 10 people haven't voted. If you can vote in the next 5 seconds, that would be great. And then we can move on to the juicy stuff. Okay, so seems to be pretty static now. So just looking here, and we've got a quarter of the people on the webinar are currently using HMRC. Half of the people on the webinar are using digital software, and 25% or a quarter don't offer this service to clients at the moment. So okay, that's an interesting one. So let's just hide those results. Back to list and moving on. Okay, so England and Wales income tax rates and thresholds. So we're going to look at England and Wales first. Then I'm going to touch on the Scottish rates and thresholds, as they're slightly different. And then hopefully you'll have an idea of what overlaps and what doesn't. So as most people are probably aware, because it's not changed in the recent years, the basic rate is at 20%, higher rates at 40%, and additional rate is at 45%. The personal allowance has been frozen, and it is still 12,570 for 23-24. From memory, I believe it's been frozen for the next couple of years as well. but it can always change at a budget announcement. So the future years, at the moment, we're expecting to stay the same, but it may change. The thresholds, there has been a change to the threshold this year in the additional rate, which we'll come to in a second. But first of all these rates are assuming that you are entitled, or your clients are entitled, to the personal allowance, and therefore basic rate covers 12,571 up to the higher rate threshold of 50,270. The higher rate threshold then starts at 50,271 and goes all the way through to 125,140, which is a reduced amount in comparison to last year. Last year it was 150,000, but HMRC announced on the previous budget that that would be dropping down to 125,140, which ties in with the personal allowance being removed once you earn 125,140. So those that are around about that earning level will see quite a difference in their tax in comparison to previous years, where you then had a little bit of leeway at 40% before you went into 45%. That's no more from April 23. Looks to be a little mishap on the typo there. Additional rate is over 125,140. So once you hit that, any pound over will be then taxed at 45% rather than 40%. And there you go. The additional rate has been reduced in comparison to the previous year, meaning more people will fall into the 45% bracket, as well as losing the personal allowance. So that's the rates there. We're going to move on to the Scottish rates now, which, if you're not familiar with them, they are quite different. But the personal allowance in regards to the Scottish rates is the same. But the actual tax rates, we've got 5 different rates. We've got the starter rate, which is 19%. We've got the basic rate at 20%. We've got the intermediate rate at 21%. Higher rate at 42%, and the top rate at 47%. In comparison to the previous years, the higher rate and the top rate have increased by 1%. Last year they were 41 and 46%. This year 42 and 47. To fall into the Scottish tax rates, you basically need to be living in Scotland. If you live in Scotland and work in England, you'll be under the Scottish tax rates and thresholds. So looking at the threshold for this income, as I said a minute ago, personal allowance, that is the same in Scotland or in England and Wales. It's both 12,570. And then for the Scottish income tax threshold, you basically got the starter rate at after the personal allowance up to 14,732. That will be taxed at 19%. You then go into the basic rate, which is an extra pound up to the 25,688. Intermediate would then be 25,689 to 43,662, and then the higher rate goes from 43,663 all the way up to the same as the threshold in England and Wales, which is 125,140. Anything over that, again, will be at the top rate, which is 47% in Scotland. And all these rates are assuming that the standard UK personal allowance is available. So in comparison to the UK tax rate and thresholds, fairly different, but I'm assuming that anybody who has clients in Scotland or if they live in Scotland themselves will be aware of the changes or the differences in these rates and thresholds. National insurance rates and thresholds, weekly rates increased this year. It's gone up to £3.45. The lower profits limit and the upper profit limit, if you are, or you should be aware, last year in November there was an emergency budget. It immediately increased by the 1.25%, and basically it went awfully. And they basically changed it back a few months later. So last year, if you are familiar with the national insurance rates, you'll know that they're a slightly quirky rate of 9.78 and 2.78, I think, from the top of my head. Whereas this year they got reduced back down and the 1.25% increase basically got abolished. So from April 23, weekly class 2 rate has increased, and the class 4 rates are similar to the back end of last year. National insurance thresholds, the small profits threshold, which basically came in the previous tax year. If you earn or have profits over 6,725 but less than 12,570, you get the stamp towards your state pension benefits in the tax year, as if you've paid the class 2, but you don't actually have to pay anything. You only have to pay the class 2 rate once you exceed the lower profits limit, which is in line with the personal allowance for this tax year. So someone with £9,000 profit will get the stamp for class 2 towards state pension benefits, but they won't actually have to pay anything. You only have to pay it once you go over the 12,570 threshold or limit. Class 4 is then in line with personal allowance up to higher rate, and then the upper profits limit is then anything over or into the higher rate band. So you can see that the government over the last few years have been aligning the national insurance in line with the income tax thresholds, and that they think, or they quoted, would make it simpler for people to understand what the limits and thresholds were. So that is the situation at the minute. Hopefully those who do understand and are aware of the rates and thresholds do find it a little bit easier, albeit they're trying to make it easier, but then they're creating these new things such as small profits limit and lower profits limit, where you'll get the stamp but not actually have to pay anything, which is obviously slightly complicating things. But hey ho, they've got to do something, otherwise no doubt we'll be moaning about them. Dividend tax rates and thresholds, in line with the 1.25% increase on national insurance. Dividends got the same increase. However, in the emergency budget in November, when the national insurance limits got reduced, the dividend tax rates did not. So they still hold that 1.25% increase. So the basic rate is at 8.75, the higher rate is at 33.75, and the additional rate is at 39.35. The dividend allowance has reduced, as it was also announced in the emergency budget, that the 2,000 limit for tax-free dividends would reduce to 1,000 in 23-24. That did go ahead, and therefore in this current tax year you can only receive £1,000 worth of dividends that are tax-free, in comparison to the 2,000 that you could do previously. Tax thresholds are basically the same as the income tax, and therefore I won't go into too much detail on that one. So the only real differences there were the dividend tax rates that got announced in the previous year. Capital gain tax rates and thresholds. Again, basic rate and higher rate stay the same, 10% and 20%. You've got residential property rates, which are at 18% and 28%, so basically an 8% surcharge for residential property, which again were the same as previous year, so not many changes there. However, the capital gains tax exemption has reduced by more than half. It was previously 12,300, which basically meant that you could have gains of 12,300 before paying any tax on them. This has reduced from April 23 down to 6,000. So in my opinion, in the previous budgets, where we're trying to be a competitive market for companies, me personally, I think that we're trying to be competitive, but these changes don't quite suit that. If you are a company business owner, you would see that the dividends tax rate has been reduced for this year, the capital gains tax exemption has been reduced. So if you were to sell your business, that would fall under capital gains tax. So that's been reduced. So that's less of an incentive to come here to build a big business up and then sell it. And then if you're aware of the corporation tax rules, you'll know that the tax rate has increased for those with higher profits. It was previously 19% regardless, and then it's been increased to 25% over 250k. So some changes in recent years, I believe, are making us less competitive than what we previously said in budgets in the past. Capital gains tax thresholds, pretty straightforward. It's basically your basic rate, or what's left of it after your income, and then if you go over that, then you go into your additional rate. So for someone with, let's say, £20,000 of income and £5,000 of gains, that £20,000 is within the basic rate, and they've still got some excess, so therefore the capital gains tax would be at the basic rate at 10%, or if it's a residential property, it would have to be at 18%. If someone had 60k of income, then they would immediately fall into the additional rate for capital gains tax, depending on what they were selling. Again, 20% if they were selling like land, if they were selling shares, investments, etc. Or if they were selling a residential property, then it would be at the higher rate of 28%. That would be after they've applied the £6,000 exemption. So a gain of £10,000 would only be taxable of £4,000 because £6,000 that falls within the exemption. I'm pretty sure everybody knows how the capital gains tax exemption works, so I won't go into too much detail. But yeah, there's not really been any changes in regards to the capital gains tax rates and thresholds for 23-24. Which moves us on to usually the hottest topic of all previous presentations and webinars, is the delay to make it digital for income tax. So what do we know so far? Well, basically, it's been delayed by 2 years. It was originally due to come in April 24. It's now been delayed till April 26. And who falls in under it? Well, previously it was everybody who earns over £10,000 of turnover, and that would be combined between landlord or rental income as well as business or self-employed income. So what's the changes been in terms of that? I know we touched on this, was it in March? I think I did a short little presentation on the changes in the tax year, but this is a little bit more detailed. So thresholds have increased, and basically anybody with turnover or combined turnover of £50,000 or more will fall into MTD from April 26. And then from April 27, those with combined turnover of 30,000 or more will then fall in under MTD from April 27. Those with turnover of less than £30,000, it's yet to be decided. I'm assuming that more announcements will be made between now and April 26. Whether it will be more delays or whether it will be some clarification on those with turnover under £30,000. But at this moment in time, last time I've read, which I keep fairly up to date with it, the turnover of £30,000 or less has not yet been decided when they will fall within the MTD legislation. So that's good news for some people with one properties, maybe some people with 2 properties that aren't down the south of England. They hopefully will be a bit more excited on the fact that they might not fall into it anymore, and they won't have to do the additional reporting. So HMRC announced in the emergency budget in November that MTD will be delayed for further 2 years, and the additional time is to fine-tune the system. They're currently working with all the big providers in regards to bookkeeping systems, so Xero, QuickBooks, and then a few others, where they're constantly meeting and discussing what the process is and how well it's working for those that are on the test run. of MTD, the pilot scheme, and basically the feedback was that it's not quite ready yet, and that's why they've delayed it. So they're looking to fine-tune the system and ensure it works upon introduction, because I believe on the pilot scheme they were having issues in recent times. You can still voluntarily join MTD for income tax, and that's by applying online. I've mentioned the criteria in the past, but usually it's if you've got either a self-employed business or a landlord property business, and you have one or the other. I don't think they've opened it up for both yet, but if you've got one business or the other, then you can join and you can follow a soft pilot whereby you'll be required to do the submissions, but you won't be penalised if you miss anything. It's just basically to get on board and get used to what could potentially be in the future. So yeah, you can apply online on that if you just type into Google pilot scheme MTD. It should be fairly straightforward. So as a little overview on that one, it's still going ahead, it's just delayed. And then another little thing in regards to making tax digital that HMRC is looking at is the phasing out of paper returns. So if you've got those older clients that are, let's say, of state pension age, so let's say 56 and above, but under the age of 70, they won't actually receive a paper return this year, or they won't be able to download it online either. What they'll have to do is they'll have to contact HMRC and they will issue one on a case-by-case basis. Individuals over the age of 70 should still receive a paper form, so that's nothing to worry about there. But those that are, let's say, of the older age range and are under the age of 70 though, then they will have to apply or contact HMRC to get them to send one out if HMRC agree to. What they're trying to do basically is force more people onto filing online because of the whole Making Tax Digital manifesto that they've got. So quick overview on that. Been delayed by 2 years. Thresholds have increased. Originally they were all 10k. Now it's been split into 3 different categories: over 50k from April 26, over 30k from April 27, and under 30k yet to be decided. I reckon they'll probably either ignore under 30k, or they will include another band of probably from personal allowance up to 30k or something. Would make sense for people, and then they'll probably phase that in from April 28. But as I say, that's just my opinion, and it may be completely different from that. So hopefully you've taken in the MTD delays and the phasing out of paper returns, because next we are going into basically a poll that is finishing us off before we go into the final announcement from Leanne and also the live Q&A. So if we can get a quick voting of the information contained on this webinar, between 1 and 5 stars. If you've got any questions or you want me to skip back because I've gone over something too quickly, or you want to jot down some rates, let me know and I'll skip back to those pages. Just stick it in the Q&A section. Or if you've got any questions on MTD, then be sure to stick them in the Q&A section now. We've got 51% of people have voted at the minute. So if we can get a few more votes, that would be great. But I'll just stop talking for a second, have a quick mouthful of my brew, because I've not stopped for 20 minutes. And then we'll move on to Leanne's announcement, and then we'll go on to a live Q&A session. So it looks like the voting's been fairly static for about 10 seconds now. So let me just publish the result. So thank you everyone for the ratings, I've got an average rating of 4.6, which isn't too shabby when you're talking about tax and other things. It's not the most interesting, but hey, thank you very much. So taking that off the screen and moving on to the final page. If Leanne, you want to jump in here, give me a break. And
yeah, I can give you a break, but whether or not you've absolutely covered everything or everybody knew their stuff, there is no questions as of yet. So I don't know if we want to give people a minute or so if there is any questions. We've never done it before that people can unmute themselves and ask a question if they wanted to do that instead of typing it, or
yeah, perhaps we could have a little conversation. But
yeah.
have we tested out the Q&A section? Because it's been 2 webinars in a row now that we've not had any questions.
No, we did have some last time, but yeah, there's nothing this time. Could somebody just type hello so we know that there's somebody there? That'd be nice.
Unless we've got
we're getting some hellos now, so it's definitely working. So yeah, we must have just covered everything. Yeah, brilliant.
That's good. So do you want to just do the info one?
Outro? Yeah, I will do. If anybody does have any questions, oh, here we go. What is the NI threshold for a company director?
In terms of employees, so basically with employees, they're slightly different to those under class 4 and class 2 because you're actually looking at class 1. Let me just get these up because off the top of my head, I don't want to be giving people the wrong rates. Do you want to just read the screen on this discount, Leanne, while I find that information?
Oh, sure, no problem. Okay, so as you all probably know, you do get a 30% discount off GoSimpleTax software. The link is, you don't have to do the www, but you can do, it's gosimpleTax.com/IAB. I'm sure there's a VAT on there as well if anybody's ever looking for VAT. There's multiple discounts available as well for multiple returns. I don't have that pricing to hand at this moment. If I could get it, unless Aiden's ready.
I can tell you what the national insurance rates are. What are you looking for, the VAT pricing?
No, I'll look at that while you answer that question.
All right. So in regards to the national insurance thresholds for a director, you have the secondary threshold, which is the 9,100, where if you're a one-man band, you may consider yourself getting a salary of 9,100 for the year. That would basically mean that you get your stamp for national insurance and you actually don't pay national insurance. So that would be usually the normal go-to for salaries. You've then got the primary threshold, which is 12,570 in line with the personal allowance, at which point you would start paying employee national insurance contributions. And in regards to when you start going over the 9,100 and above, you'll start paying employers. One thing that I have had a look at for those that have got company directors as clients or they are company directors themselves, it may actually be better, depending on your profits for this year, to pay yourself 12,570. Take a little bit of a hit on employers' national insurance, bearing in mind that it is allowable against the corporation tax. And I think it gives you a couple of £100 net in your back pocket if you are extracting all profits from the limited company. Obviously, it would be a case-by-case basis, so just double check on that. But if you're a sole director, it may actually be beneficial to increase your salary to £1,047.50 per month, rather than, I think it's 760-ish per month. So just double check on that one. But yeah, they're the main thresholds that you need to know. You've got 9,100 where you'll get your stamp but not pay anything. Anything above that, you'll pay employers and NIC at 13.8%, and then anything above 12,570, you'll pay employees. at 12%, up to the upper secondary threshold, which is 52.70, and after that you'll pay 2%, the same as you would as a self-employed individual.
Okay, thank you. So there isn't any more questions. If anybody was waiting on the VAT, on the email that you receive after this, I'll make sure it's on there, because that page is actually down at the moment, which doesn't look very good for us, but they must be working on it behind the scenes. So I will make sure that that's available to you should anybody ever be interested in looking at that. So yeah, I think that is everything. There's no more questions coming through. There's lots of thank yous. Thank you to you for joining us. And I think we'll draw it to an end. So just say thank you again for the IAB for allowing us to present this to you today. And I'm sure we'll see you again over the coming months with our other webinars. Thank you. Have a good rest of your day.